Hey, good morning, everyone. Happy Memorial Day for those of you who are in the United States. Um, Prices of BTC currently at 88.29, and it looks like prices are trying to move up a little bit higher. So let's get to the BTC analysis right now. After a big spike move up yesterday, all the way to about $8,900, we had a bit of a pullback, sort of like a bull flag, if you will. Right, I think we're still going through that. Maybe a bull flag, bull pennant, something like this. I would expect this to break out no more than I don't know, another 12 hours at the most, because there is a lot of bullish pressure still in this area. A lot of volume went into this move right here. Usually you have a bit of consolidation in a pennant or maybe even just a sideways movement before you just gear up again. Okay, so to understand what exactly a bull flag is, usually there's a lot of volume or bullish pressure that goes up into an asset, and then price sort of hits a peak where prices are really high, and then there's a decent amount of supply in a particular region. And so the bulls, which is the demand, is sort of meeting the supply almost equally right here. And eventually, if the bullish pressure is still to continue, they will absorb all the supply in this area, and then they'll push it up even further, because once you've absorbed everything in this area, the bulls are willing to pay a higher price for whatever this asset is, and keep driving the prices up higher. Okay, so that's really the anatomy of how a bull flag works. All right, it's really not just a random esoteric pattern. It's actually the supply and demand economics of how the structure of this pattern works out to be bulls sort of pushing the prices up, consolidating because there's a lot of sellers up here, absorbing everything that the sellers have, and then driving the prices up because they want to eat more of this particular asset. All right. Awesome. So for the most part, we've sort of broken out of this big pennant, and I knew at some point we were going to break through. I had actually stated that it would take longer in this area because historically, with most assets, once you start breaking above the 200 moving average, or in this case for BTC, it would technically be the 365-day moving average, you typically have 4 to 8 weeks of consolidation, and then you start gearing up for a bigger move. But this move right here, breaking out in less than 10, 12 days, only speaks to how strong the strength of the bulls are in this current market condition. And we will almost certainly, in my opinion, be headed up towards this 10,000 to 12,000 block right here. Okay, so I remain bullish in how I see price action heading towards that area. I don't see anything really in the way between now and say first target being 96, 9700, and if we sort of chew through this area, then it's most likely going to head towards 12,000. All right. So still bullish in terms of how I see this heading up. We've now broken through the monthly and weekly pivot. As you can see, the weekly candle actually closes today in about 12 hours or so. So this weekly candle, or actually, wait, maybe it did already close. 1 second. Oh, actually, yeah, it actually closed yesterday because it closes on Sundays, at least in terms of the U.S. 8 p.m. Sunday. So it actually closed like this. Okay, this is a very positive candle, in my opinion. And if we start looking on the TD sequential, even though we look like we are far overextended on the TD, clearly BTC has not cared about the TD so far, and it's just consistently just cruising on up. If we start putting up the Ichimoku cloud on this, you could see that we're just about to start hitting that HU cloud, guys. So this is again going to be a very interesting area for BTC to climb up and through, because this now matches up this 92, 9300 area with how prices sort of closed in this area right here on April 2018. Okay, so usually you start seeing the edge of the cloud just below how the previous big resistance was, and the top of the cloud essentially to where the top of this resistance was. All right, so that's why this is all going to be a decent amount of resistance that we have to chew through. If it does happen, then we have essentially flipped the Ichimoku cloud as bullish if the prices sort of move above it. So I think it's going to be a pretty heavy battle that the bulls are going to have to deal with over the next $1,000 or so that we have to get through. All right, but for the most part, it's looking good. It seems like the pressure is more on the bears than it is the bulls. Here's the monthly for May. I mean, this is a fantastic monthly. I don't see any structural issues in this monthly. I mean, the bulls are not letting up, and the way I see it, if we close this monthly as is, or even $100, $200 more, I don't see why in the next 1 or 2 monthlies we can't head up even higher. Okay, but eventually, as I've stated in my YouTube videos multiple times, if we start looking at the Nikkei, the Tokyo Stock Exchange, I've stated how, way back here when the Tokyo Stock Exchange, actually, let me pull up a different chart. Where exactly did I do that? Let me see if it's on this chart right here. Nope. Might be over here. This is a pretty cool illustration of, how I was able to sort of find 2 particular assets that looked exactly, the same as BTC right now. As you can see, BTC high is analogous to this high right here in the 1989 December of Nikkei, the Tokyo Stock Exchange, and then subsequent collapse, lower highs, and then a capitulation. And then once we created this low in the Tokyo Stock Exchange, this is again 20 years later or so. Okay, then we started to have this big move up, and this is where BTC is sort of coming close to right now. Okay, but then eventually we get a big retrace back to the previous lows, and then we sort of move up and out of it years later. So because BTC moves so fast, clearly I don't see this being like a multi-year process. It may be a few months at most. But again, same thing with gold right here. This top right here was accomplished in gold September 2011, then a lower high, capitulation eventually. This low right here is analogous to the BTC low that we put in around $3,100, maybe in December or so. And then a big rise up is what we're seeing right now. We may be coming up here in BTC soon. And then this right here is a retest of almost 786 fib. And then we sort of move away from this. And as you can see, with gold, it has yet to even reclaim, highs past this swing right here. Okay, so this is why it's important to sort of pay attention to assets that look, similar to BTC, right? But for now, for the most part, I am seeing some really nice movement in alts, especially LTC and Ethereum. And in our community, we definitely have those open positions right now, as you can see right here. Here are all my open positions. We are up on every single position right now, actually. We did close out Waves and Fetch at a loss, but it doesn't matter in the grand scheme of things. We're up so much on other positions. It clearly dwarfs all the losses in these 2 trades right here, okay? So never be afraid to show your losers, guys. Everyone will incur losses. It's just about creating your losses to be small and your winners to be big. Awesome. Nothing too significant on the daily. I would say the next couple of days with the CME volatility that's about to come in, due to the fact that May 29th will probably be the last expiration date for the BTC CME futures contracts. There's going to be a rollover into June. And so I would expect a decent amount of volume going into BTC to push prices higher, because as I've mentioned before, once we go to the CFTC website right here, this is the CME contracts, open positions and open interest. You could see, I'm sorry, these are not open positions. This is from the last week, okay? But you can see that there was a decent amount of long interest right here. And I would say this is going to continue on for the next, maybe a month or two. All right. And as I've stated yesterday, when we look at the CME volume, if you look over here on settlements, there's a decent amount of open interest waiting for the May contracts to be closed starting tomorrow, because again, today is a holiday in the United States, so this is probably going to be rolled over into the June contracts. And if we're seeing the long interest still be continuing for June, then I would say all this is going to be rolled over into the June contracts to have this market go long. All right. And long meaning, prices could hit 10,000, 12,000, maybe even higher. Okay. I think that's pretty much it. I just want to do a quick summary of exactly what's happening in the market. I'll check out Ethereum real quick, just because I'm in a bunch of ETH trades. Here's Ethereum. Ethereum still looks poised to get through this area. First, it really has to grind through, this 280s all the way to about $320. Once it breaks through this, 400 is going to come, very easily. And if 400 is broken, honestly, I'd say the all-time high is really the next big resistance. Okay, I don't see anything. Well, maybe about $800 and then the all-time high. But beyond that, I don't see anything else in the way. All right. This is not investment advice, so don't put all your money into Ethereum. This is just what I'm doing. You can see my open positions right here. I'm very transparent in my community. I just show exactly what I'm doing. I make trade setups for people who want to see exactly what's happening in alts, and we trade based on that. All right. We have our other analyst, Jordan, who also makes a good amount of trade setups. One here was for EOS. EOS is already up 10% from his trade setup post. So yeah, and BTC, actually, we got a quick scalp out of it. So, you can see that we can make quick trade calls or multi-day or multi-month trade calls as well. Okay. So I'm going to talk about this Wyckoff distribution schematic because this lines up with the weekly itchy cloud that I just showed you earlier. And this is to help you get prepared that just in case price gets rejected by the weekly Ichimoku cloud that we just saw earlier, how exactly is that going to play out? And how does the Wyckoff distribution schematic help us understand if this is truly going to be distribution and if prices are going to dump lower? Okay, so first we need to understand the structure of the Wyckoff schematic. Okay, so it kind of looks like this. Okay, so if you can see this, usually what happens in distribution when institutions are about to unload a lot of their supply into the hands of retailers buying at this level, because retailers are usually thinking prices are going to go much higher, you need smart money to take all this stock, this security, off your hands right here. And the way you do that is you kind of create this big ranging sideways movement right here, making it look like a bull flag, making it look like prices are going to poke up higher. But really what's happening is this is all distribution, meaning there's a lot of selling happening in this area with a lot of sort of positive, sentiment. But really the retailers just need you, or I'm sorry, the smart money just needs you to take this asset off their hands. Okay. So here's how that kind of looks. Okay. So here you have the preliminary supply. This is where really the large amount of interest is, being able to unload shares in a large quantity after a big pronounced move right here. Okay, and volume typically expands in this area and price widens quite a bit, signaling that a change might be in trend, and this may be approaching a bigger shift to the upside. And this is usually where the buying climax happens. Okay, again, you can read all about this here in my TradingView post on the Cryptosomniac username right there. I posted about this yesterday. All right, this is only to get you prepared just in case prices don't head up towards 9,600 or 10,000, 12,000, whatever. Right, as a trader, you must always be aware of the positions to the opposite side that could play out, right? So this could very well be one of the ways where prices could just dump over the next, $600 to $700 if they do move up. All right. So anyway, so the way distribution happens in this area is you typically have this buying climax, this automatic reaction right here, which is really just intense buying if prices just drop, which is exactly what happened, right? Every time prices dropped any bit lower, the dips got bought up, and then the next move that happens is this called a secondary test, where price revisits the area of the buying climax to test the demand and supply balance at these price levels. But for a top to be confirmed, supply must outweigh demand, and volume spread should thus decrease as price approaches the resistance area of the buying climax. Okay, which is, for the most part, it has essentially happened. All right, and then usually after that, you have a upthrust right here in this region. And then after, you have a pullback from the upthrust. So say we went down, for back into the high 7,000s or low 8,000s. And then we had another upthrust towards 9,300, 9,400. But then we pull back down again. Your stops will probably be over here, or worst case scenario, they'd be down here. Okay, if this sort of schematic plays out. All right. And usually, at first you see a first sign of weakness in phase B right here. Again, I do the phase analysis in this post right here, so you can read all about it. I don't have an hour to explain everything, but you can read all about this in that post. So for the most part, you'll see the schematic sort of playing out like this. It doesn't have to go according to these lines, but you'll see certain levels sort of give you false sense of bullishness, thinking that prices are going to go up towards 10,000, 20,000, whatever. But really what's happening is a big sort of distribution at play. All right, so do keep this in mind, guys, when you are trading. And that's it. All right, folks, that's all I have. I hope you enjoyed this analysis. Come join our community, and I'll be posting more tomorrow and the coming few days. All right, cheers.